Good morning, guys. September 25th, 2019. It's a Wednesday, and sometimes, damn it, sometimes the market just doesn't want to go as fast as we would like it to go. So, the crash is still very much in the making. However, there is a probability of a slowdown in the rate of the drop today before the giant drop actually will take place September 26th and September 27th. In this case, we're going to analyze a few charts that point to a potential 3-3 move on Thursday and Friday. Especially for those of you guys that trade with small accounts, this is like the holy grail of opportunities. So if we time this right and you position yourself correctly, going into Thursday and Friday, you can literally double, triple, quadruple, quintuple your accounts. Okay, so get ready. This is where trading gets excited, but requires 100% focus, guys. I dare each and every one of you to get off your ass, work out before the market opens tomorrow, before the market opens on Friday. You got to stay fresh. You got to get plenty of sleep, because every move you will make, okay, especially if you're day trading, it's going to be crucial. Okay, so with that being said, oil continues lower. Lower oil is a reason for the market to fall lower. So it's got nothing to do with Trump releasing the Ukrainian conversation tape or any of that. It's just a bunch of basically noise out there. But what really matters, if oil continues to go lower, it gives the market the reason to continue to go lower. Some of the charts that we're about to present, okay, and some of the historical evidence that will be revealed to you as far as the 13 market moves that were taking place in certain months within the last couple of years, point to a fact that there is a probability of a move 12. Move 12 is where things, they kind of like what we're seeing pre-market right now. It looks like things are dropping. I mean, at the point I'm recording this, we're down like 8 points. Not a big deal. But there's some signs that clearly point to the fact that we could just pause. Today is going to be kind of like a day of a pause before the bigger drop. It's going to be like the calm sea before the storm really hits it, before the hurricane comes through. So today is the day where you don't want to jump out and put big positions at the open, with the exception of a couple of trades which we are going to review. One of them is BYND. My favorite trade of the day is AVGO, but as you guys know, sometimes my favorite trades, they don't materialize right away. But that is the only trade I would jump into pretty much at the open. AVGO, of any sign of a bounce, okay? This crazy thing did an offer on the 3 billion shares. Damn, that's not, guys, that's a huge number. Any stock by now would have flopped like crazy, maybe 30 bucks. This stock is only down 9 bucks, represents insane opportunity for buying some puts on AVGO this morning. LRCX is another trade that's a correlation type trade associated with AVGO, and we're going to reveal the catalyst that will propel these two stocks lower over the next 7 days. Now, Amazon chart is completely broken down. It's actually under the orange, guys. It's under the orange line. It makes sense to short any bounce on Amazon. It makes sense to short any bounce on BKNG. I don't have the time to insert all of these charts here, guys, but I will reveal them tomorrow. W gets another sort of analyst out there saying, hi, I'm not sure what's going to happen to this thing, so I'm just going to put a target price of 125. Anytime you get some stupid action like this, guys, it makes sense to short. So just keep buying W puts, and mortgage applications are dropping. That could negatively impact Tree, which is LendingTree. LendingTree is currently trading around 320 bucks. It would make sense to buy some 300 level puts. There's a lot of put activity that we're noticing in a 280 strike in Tree. But unfortunately, Tree does not have weekly options. So if you're trading a smaller account, guys, that is not going to be your ideal trade, because these options are going to expire in 23 days, 22 days, and they are going to be costly. However, the trade itself does make sense considering what we're noticing as far as the activity with the institutional investors, this thing could easily drop 30-40 bucks from there. But with that said, we got better opportunity than this. Let's review real quick what's going on with oil. If you remember, just a few videos ago, we were talking about a potential of oil breaking above 61, 62, and we said if we didn't see that break above that level, that it was going to resume the drop lower, and so it did. And not so long ago, we're at 57, 58. Guys, this morning we're in the 55 handle. We're in the 55, which is not that far off anymore from that key level of 50. Once oil breaks above 50, it's going to be talked about in every news channel, all media outlets out there, and it will drive the market lower, because once we break below 49.50 level, oil is going to tank all the way down to 42. The idea is this: if oil cannot rally on all these shortage supplies and all this crazy stuff going on in Saudi Arabia, guys, oil is in a difficult situation here. And if oil continues to drop, that tells you that the world economy is continuing to slow. So it's not really a story about oil, but it's just a pure reflection of world economies looking at themselves in the mirror. And it's not looking pretty. The shit is going downhill. Okay, so with that said, clearly makes sense to just short the hell out of oil stocks while they are still sort of in a position of a bounce. Now, Bitcoin, guys, we haven't talked about Bitcoin in a while, but I think it's time to talk about it because Bitcoin has been a good indicator. It's been a wonderful leading indicator of where the stock market was going to go next. So when we analyze all the instances where the market has dropped 5, 10, 20%, it typically has been preceded by Bitcoin dropping 10, 20, 30, 40%. This is exactly the scenario we're actually getting now. Bitcoin is actually attempting to break under this 8,000 level. Now, it's likely to hold this level, but this is one thing that we're paying very close attention. Besides the price of oil today, we're paying very close attention to what Bitcoin is actually doing, because if Bitcoin indeed, once the market opens up, if it indeed is going to break that 8,000 level, and it doesn't even have to break it by much, guys. I mean, 7,800, 7,500, that's good enough to give the stock market next move substantially lower from where it's at right now. So paying attention today, especially between the hours of 11 and 1. 11 and 1 is significant hours today because they coincide with a bottom structure in a potential move 12. In a potential move 12, we open slightly lower, we work our way lower, and then we bounce from there between the hours of 11 and 1, ultimately gaining some momentum into the close. The importance of this information, if you're day trading, if you're trying to identify your entry level today, is you don't want to overstay your welcome on the put side. You ultimately want to close out your puts between 11 and 1 if you don't see a break lower in oil, if you don't see a break lower in Bitcoin. If those two things are moving lower, that is the condition that has to be met in order for us to keep maintaining our put positions on the market, meaning like the S&P futures, the QQQs, and all the stocks that we've been talking about, like Amazon and BKNG and Roku and Shopify and all that great stuff. Okay, so keep an eye on the chart. And guys, if you have TD Ameritrade, all we're keeping track of is /BTC. Just plug that in. This is actually a representation of a 1 month chart, 20-day chart, actually 20-day, 1 hour. But you can plug these in on a 1 day, 1 minute chart and really keep track of what Bitcoin is doing. So just remember, between 11 and 1 is going to be crucial as far as making a decision of whether you should stay in your put positions or whether you should jump out and re-enter those positions right at 3:55 p.m. in the expectation of a huge drop in the markets tomorrow and Friday. So your ultimate entry you're trying to time is whether you should remain or whether you should add or whether you should about between 11 and 1 jump out, which could coincide with lows of the day, and then re-enter at about 355. So that's what we're trying to track when we're looking at Bitcoin futures. The move 11 continues. We get all these situations multiple days in a row where we have move 11, move 11, move 11 intraday, followed by a drop. That was September 23rd. September 24th, we had the same situation, right? Move 11, move 11, move 11, followed by a bigger drop yesterday. It looked like the markets were ready to completely unwind. In pre-market today, we're seeing the same stuff, but let's review the levels. So the next level is 29.46. After that, we need to break 29.22, 29.05, 28.91. What I am saying is Thursday, we can see the markets actually hit this level of 28.91. If we do hit 28.91 on Thursday, then Friday, we can actually hit. I know you think Leonardo, man. Dude, what are you thinking? I'm thinking 27.75. 27.75, guys. I know it sounds like, man, you really think we can get to 27.75 by Friday? Yes, there is actually a potential to do that if we get 2, 3 moves in a row, meaning like a move 3 on a Thursday and a move 3 on a Friday could easily get us there, okay? And that's why I'm saying this is almost like an opportunity of the year because it follows a very bearish sequence. All we need to do is get a move 12 today, and I'll explain you guys at the end of the video why this move 12 today is so important. Now, some of the things that do not look normal, that represent a divergence, if you will. Typically, when you see BYND shares, when we get any kind of news, oh, BYND signs a deal with this company and it signs a deal with this company. What has typically been happening with BYND shares? Well, they bounce. They bounce. It doesn't matter how big or small the deal is. They just bounce. They go higher. Oh, they got this new burger. Oh, my God, $20 pop in the stock. Oh, they signed a deal over here. Oh, $7 pop in the stock. Like all of a sudden, it signs a really good damn deal with Costco. Costco's going to sell BYND burgers. And what do you think is going on? Absolutely nothing is going on. On the news of the deal with Costco, shares are doing absolutely freaking nothing. They were hitting a low of 139 yesterday, which was a beautiful trade, by the way. For those of you guys who took it, congrats. This was a nice, easy trade. We said shorted on the bounce. Sure enough, as soon as the market opens, the damn thing bounces, then it drops all the way to 139. But let's say you missed out on this trade yesterday, okay? Basically, the fact that this stock is failing to rally on what has been the reason for the stock to rally each and every single time over the last few months is telling you that nobody cares any longer. I mean, it could sign a deal with Trump to deliver burgers to the White House and nobody gives a shit, okay? So it could sign a deal with Australia. Damn it, it could sign a deal with the entire Ukraine country to provide burger for every single person in Ukraine. It's probably like about 80 million people. And the market says we do not care. So the stock basically, in good news, does not do anything. It still trades about 142 pre-market, very tiny volume. Okay, basically that equates to a further drop in the stock. So let's say market opens. Typical characteristic of the BYND shares is pop right around the open, then it starts selling off. Okay, I'm not even sure if we're going to get that, but if we are getting the pop, some kind of pop in this dead meat stock, we're going to short it. That's what we're going to do. So let's say it pops to 145. We're going to buy 145 puts. We're going to see the stock at these crazy levels of $100 in the next 3 weeks. This is how the longer time frame chart looks. It's a pure head and shoulder formation. And remember, I pointed out yesterday in the video saying the longer the head and shoulders is being formed, the harder is going to be the drop. So basically, BYND will drop to $100 in the next 3 weeks. We're nicely positioned. Look how long we are under the blue. The significance of being under the blue is the fact that the stock has no capacity, even on good news, to break above a very major important line, which is the 50-day moving line. And the longer it stays under the blue, the less likely the institutional investors to actually continue buying the shares of such stock. Because typically what happens, the moment the stock falls under the blue, when the stock is in an uptrend or falls under the blue, if there is indeed a great demand for the stock, what you will observe is institutional investors that will come in and they will buy the shares pretty much immediately, causing a bounce above the blue. Well, it looked like there was some interest here, but now there's no interest. And the interest is fading at rapid rates, which coincides with a death cross on the MACD. So anytime we have a situation like this, we want to short a particular stock that is drawing these beautiful things for us. Okay, next one is AVGO. That is officially my favorite trade for the day. Here's the thing. AVGO goes out and it says, hey, we're going to sell $3 billion of additional shares. And the market says, well, okay, I guess. We're not sure. The stock is only down $9. It should be down $30, damn it. But it's not. So to me, when I look at this, it's a pure divergence. Come on, man. That's not like it goes out there and sells 200 or 300. I mean, this is like $3 billion offer. This is a big size offer. And for the stock to only drop $9, it's just like them saying, okay, we don't really care. You might as well done a $10 billion offer and we would still not care. But I think the market is going to care once the market is going to open up. So this is what we're going to do. We're going to buy 280 puts, 275 puts, 270 puts on any intraday bounce. We're going to start buying this thing on puts as soon as it opens. We're going to buy a certain amount. We're going to buy on any bounce, guys. We're buying AVGO puts. That is that simple, okay? And this is the level we're targeting. Let's take a look at the longer time frame charts here. AVGO, divergence on the RSI, multi-top formation. I mean, is there any chart that you can find out? Okay, as a matter of fact, if any of you can find out a damn chart out there that has more black candles than a VGO, I don't know. I'll give you a free course of some kind if you haven't taken one already. Okay, so look at these black candles, guys. This is not a joke. I mean, institutions keep selling it. I know price action doesn't show that, but they keep selling the hell out of this thing. So I think it's clear to understand here that just recently, the last time it tried to touch the 300 level, it sold off in huge volume again. All the volumes that are noticeable right here in the last 10 days, they are the volume spikes on the sell side, not on the buy side. The buy side is rather indifferent, right? It coincides with the cross on MACD, bearish cross. Looks like there's plenty of people can still come in and unload this thing. Guys, this is a nice setup. Clearly a death hook forming right here between the blue line and the orange line. This is a beautiful setup. And if you look at a longer time frame, where we're headed here on this thing is 252 is our first target and 221 is our second target. And we can actually get to a 252 by Friday. We're going to certainly take some longer time to get to 221. We could be there in the next 60 days. But here's the key thing to consider. Okay, so the $3 billion in offering and the stock is only down $9. What is any other catalyst that could propel the stock lower? I guess that is the ultimate question to ask. When you see a stock down already, you should be asking yourself, is there more room to the downside? And yes, in this particular case, there is more room to the downside. Here's the catalyst that we think is going to propel the stock lower. So the question is basically, why now? Well, the biggest catalyst we think is going to take the stock down is the Micron earnings announcement, which is actually going to come out tomorrow. So Micron is going to announce earnings tomorrow. We see some clear divergences in the Micron charts. And we think, despite of whether the earnings are going to be good or bad, they will sell Micron shares all the way to a level about $39. So as you can see, Micron has moved substantially higher from this level of 32 all the way to 50. There's some clear profit taking that's taken place right here. It's against a very major resistance line. Volume continuously moves lower as the stock price moves higher. You got a death hook right here. You got definite signs that it's topping out right here in the accumulation, so there's more people that are likely to sell. When you take a look at the daily chart, guys, there's very distinct move 11 right here. and another one forming. When I say when there's another one forming, it's almost formed. It's about to drop right here, which is going to complete this move, and that would put us at a level of 42, possibly 39.97. Okay, so basically target this level on this thing. We're not actually going to trade this thing, but we're going to trade LCRX or AVGO off of this catalyst right here. So 2 move 11 formations create ultimate 2 double tops. This stock is going to drop tomorrow. It doesn't mean that initially it cannot spike higher and then drop, so be very careful. Do not short this thing ahead of earnings, but overall this has a much higher probability of moving lower rather than higher, also represented by this volume, by the def cross, by the head and shoulders right here, and the accumulation distribution, guys. So if you are not liking the idea of AVGO, another one to pick up, actually cheaper on the option side, is LRCX. And LRCX actually has been hitting all-time highs, but it's definitely showing signs of weakness. Just look at these crazy sell side action right here, represented by the red volume. So at this level, about 240, there's a lot of institutions that want to get rid of this stock. So by analyzing these 3 charts, AVGO, Micron, and LRCX, it is not just about AVGO any longer. It is about the entire sector about to roll over, guys. And when the entire sector rolls over, what that means to you as a trader is a higher probability trade. You want to short a stock in a sector where the entire sector is just rolling lower and moving lower. Then the force of that sector just helps you stock. It's just like the extra wind helping it. And another key thing to consider is typically the management within these companies, the moment they decide to do these big time offerings, often coincide with the top in the stock. So these guys, they're not idiots, right? Their job is to, if they're going to do an offering, their job is to do an offering before a bigger drop actually comes. So the fact that they're doing such a huge magnitude of the offering, $3 billion in AVGO, and the fact that it coincides with all these moves 11s and divergences in MU and so on, tells you that this is the damn top that you want to short. It's that simple. So take your pick. I would go LRCX or AVGO, and there's plenty of room to drop. Okay, on this one, it can easily tank all the way to the 212 to 10 area. I mean, it's plenty of room, guys. It's a $30 drop, nice and easy. Okay, yesterday, on September 24th, we officially had a move 2 with definite characteristics of a move 11. So here's how this move 2 looks. Pop, drop, pop, drop, pop, drop, pop, drop throughout the day. Bigger pop. We send the message in the group, say short this bounce. And this was actually the move 11 characteristic within that move 2, which we have been noticed now multiple days in a row. Whenever we get a move 2, we have a move 11 packaged inside of the grander move 2, which all are indications of a market top. So 2-day sequence 6-2, nice and easy sequence. Basically the market sells off towards the end of the day on strong volume right here, kind of go sideways for a while, and boom, here comes that 2 with a characteristic of an 11. Nice and easy. If we take a look at the prior day, we had exactly the same thing happening. Here was that move 6, but prior to that we had that move 2 with a characteristic of a move 11. So basically all we're doing is we drop, we pop, and then we repeat it. So it's a mirror image. You gotta be very excited when the market gives you such phenomenal opportunities, guys, because it is very proportionate. These moves they're almost measured down to a T, the way the market is doing this right now, and with that comes great opportunity. So 5-day sequence is 10, 11, 2, 6, 2. So we got a 2 looking at a mirror of another 2, but now on a lower level because we're slowly working our way lower. It is not apparent to just everyday trader or a market participant that a bigger move lower is about to take place, but our market move sequence clearly showing us that a huge move lower is about to take place. So 11-262, guys, that is a highly bearish sequence, and there's multiple ways to look at it. Yesterday we placed the slide in the video, basically showing you that, hey, this is a head and shoulder. And indeed, what happens in a head and shoulder is it's followed by a drop. So we got the drop yesterday, and in the next 24 hours, we're fixed to get another drop. Now, it does not mean that we cannot trend sideways overall. When I say trend sideways overall today, plus minus 10 points is what we're likely to see today, followed by a bigger drop tomorrow. So the way to break this down, to make sense out of this, is look at these straight lines lower, like this sell-offs, right? This sell-offs, this red lines going lower, they're basically overwhelming the market. But all of a sudden, notice that instead of like a straight 90-degree perpendicular type drop, all of a sudden pre-market, we're kind of changing the slope a little bit. And the fact that the slope is changing is telling us, do not expect a huge drop today. Expect the market to just waver and go sideways a little bit before a bigger drop. So temporary pause before a further drop is the likeliest scenario today. Now, if we were to try to identify a part on this 5-day chart that could point out to how things could be looking today, it's most likely going to be this. So straight line lower, red line lower, another straight line lower, and then we get this, what I basically drew a yellow line right here. It's kind of, it's going lower a little bit, but it's overall it's just kind of sideways before another red line like this. So expect this today, kind of like another one of those yellow lines followed by a further drop. Another way to look at this, guys, is how symmetrical this 5-day sequence looks. We have an identical 2-day move 2 pattern, right? So you got a pop followed by a drop followed by a move 11. We got a pop followed by a drop followed by a move 11. Very symmetrical pattern that is likely to continue. So again, expect kind of this today and expect this tomorrow. Okay. If we look back at the historical data of the 13 market moves daily, the similar conditions I have been able to identify that took place recently within the last couple of years were such as in May of 2019. If you look in May 22nd, we had a sequence 11, 3, 11, 2, 11, 3, 11, 2. It's almost identical to the current sequence, even to the point where VIX numbers are almost matched daily. Okay, so here's what you get. You get 11, 3, 11, 2. We can easily substitute that for 11, 2, 6, 2. It's almost identical. Moves 11 and 6, they're pretty much almost interchangeable. They're just topping moves. And so what you really get the next day, on the 5th day, you get a move 12. As you can see in the characteristic of behavior, we had it underlined as a move 3, so it was move 12 overall, but had definite characteristics of move 3, which looks like exactly what we're about to get today. So expect a move 12 today, but look what happens next. That's what's important. You get another move 11 followed by a huge move 3 with a characteristic of an 11. So beautiful thing. There is a drop Thursday, Friday. As you can see, it almost coincides with the days. It's a Thursday and Friday drop, 11-3, 11-3. Now, we may not be getting an 11 tomorrow. We may just get 3-3. 3-3 would be ultimate combination to lock in some crazy gains. Okay. Another instance in the history of 13 market moves is the October of 2018, where we had a combination of 6, 11, 6. 6, 11, 6. Now, it's important to understand, and I don't have that slide here, that in September, the last 2 days of September of 2018, they were moved 11, 11. So we actually had a sequence 11, 11, 6, 11, 6. Basically had 5 topping moves back to back that predicted the crash. There's actually a video out there on YouTube somewhere, guys. If you want to find it, review it. It's called Market Move 666. That predicted a further crazy crash in December. But when you see this 11, 6, 11, they could be easily substituted for 11, 2, 6. They're very They have the same characteristics at the top, and institutional investors, they begin to unload shares in high volumes. So basically, when you see this, it's time to get ready for a 3 and a 3. And you can see in the history of this, where do these 3 and 3 fall? They fall on a Thursday, on a Friday. So we have a really good setup on a combination where we can get a 3 and 3 tomorrow on Thursday the 26th and Friday the 27th. Now, more importantly, notice after this bearish sequence, we get a what? We get a 12. So we get a 1 day of a 12 move, which basically the market's stalling out, and then it's followed by another 11, and guess what else we get? 3 and 3. And that's when VIX actually crosses beyond the 20 level, actually hits 28 on this particular day on October 11th. So 3-3. 3-3 is definitely coming, guys. It's just a matter whether it's going to fall on this Thursday, Friday, or whether it's going to fall on Friday, Monday. Ideally, want it to fall on Thursday, Friday type combination so everybody can make a killing. Okay, so that would make me super happy if everybody made a killing this Thursday, Friday, guys. So next market move, basically for today, we are assigning the highest probability of a move 12. The second probability would be a move 3, and the third probability would be a move 11. VIX is finally above 16, so numerically VIX is high. Okay, it is uptrending. If you guys don't understand this, you have to study the 13 market moves to make sense out of this information. Okay, now officially VIX is uptrending, and this meets the condition to buy puts out of the money. The only condition where you should be buying puts out of the money, guys. This is how VIX was looking yesterday pre-market. Basically, we said, look, it's going to try to make an effort to take out that 16 level. It certainly did. Pre-market today, VIX is hitting a high of 17.93. Now it's likely to give some of these gains back, maybe move back forward, but expect basically VIX to be kind of trending between 17 and 18 today, pretty much throughout the day, and ultimately possibly jumping above 20 level by tomorrow. So key takeaways, guys, is quite simple. Short any intraday bounce. Continue to buy puts on all stocks. VIX calls are up 30-40%. I mean, VIX is in the last day. So guys, if you bought the calls on VIX, you should be very happy. W, Amazon, AVGO, LRCX puts, Cloud Stocks puts. Still watching for move 6 behavior, guys. Position for a big drop tomorrow on Thursday and also Friday. Let's rock. Make this week your best trading week ever, guys. I'll catch you on the next trade tomorrow.